The crypto market so far has been following a very distinct pattern. We get 3 up years, followed by a big crash, then 3 up years, followed by a big crash. And so if history repeats, then 2024 is set to be another great year for the crypto market. However, the big question is though, is this time different? This time we have high interest rates. This time we're tackling a big problem with inflation. And this time we could be entering a recession. And so in this video, we're going to be taking a look at the key thesis from Raoul Pal, a former Goldman Sachs exec and with decades of macro investing experience. And he's built his own entire framework on what is going on and how we can all make some big money in this coming year. So we'll cover, is inflation still going to be an issue this year? What is going to happen with central bank liquidity, aka the money printer? And then we'll finish with some big price predictions for Bitcoin, Ethereum, and the altcoin market. Okay, so first up, the big battle the Fed's been going through is getting inflation under control, as this really is the key to being able to lower rates and turn the printing presses back on. And so, starting with this slide, which is Raoul's main thesis for his whole framework. And this is his business cycle dominoes. And it all revolves around the ISM going through the middle. So with Raoul, you'll hear a lot about the ISM, which is a manufacturing survey which comes out once a month. And essentially, if all the manufacturers in the US are doing well, this shows strong economic growth. And if they are struggling, then it shows a contraction. So it's one of the key indicators for the US economy. And on this side, we've got the central banks. So this is the Fed, and this is the data that they look at, which comes in at real time. So they're looking at the CPI, they're looking at the unemployment rate, and they're making their decisions off the real data. However, with macro investing, it's all about predicting what's coming next and looking 6 to 12 to 18 months into the future. And it reminds me of the Wayne Gretzky quote, the famous ice hockey player. When asked, "How are you so good in ice hockey?" he replied, "It's not about skating towards the puck. It's about being able to know where the puck is going." So same principle. So with risk assets, these are the first things that will crash and also the first things that are going to recover and lead the way. And then with Raoul and his partner Julian, they are living about 18 months into the future, looking at leading indicators and what is coming next. So first chart is the ISM survey, and this is the white line. And I think one of the first things to note is that it's actually very, very cyclical. And the key line here is 50. So, and when it's below 50, this is when manufacturing is struggling and the economy is likely contracting. And when it's above 50, this is when manufacturing's doing very well, there's growth, and businesses are making lots of profit. So the ISM is very, very cyclical. Times of growth, times of contraction, times of growth, times of contraction. And Raoul's looking at a 22-month lead on the ISM. And what does it say? It says right about now, 2024, there's going to be another massive boom in the economy with some nice healthy corrections along the way. And this was how he was able to predict the absolute bottom. Quite well known for buying Solana right near the bottom and getting 1,000% return. And this is how he did it. Next chart is the biggest battle going on with the Fed. It's the number one thing they are looking at, which determines interest rates and liquidity, and it is US CPI. And what he's done here, he's looked at an average of 5 major outbursts of inflation from 1940 to 1980 and created an average. So this is on average what happens when inflation gets completely out of control. On these 5 occasions, it also broke past 8%, and then what happens afterwards. So this is the average, and then this is overlaid is US CPI. And it's pretty much doing exactly what it's done. So lots of people are calling for sticky inflation or the return of inflation. However, what this chart shows is that inflation is under control, it's been coming down and will continue to do so, back down and under the 2%. So yes, you may get spikes back, this is perfectly normal, but there's an overall downtrend. So essentially, US inflation is now under control. And final chart on inflation is what happens to risk assets. So again, he's got an average of major peaks in CPI, and this time across 12 different periods, 1950 to 2018, which is in blue, and then overlaid this time is what happens to the S&P 500. And this is where we're at right now. Now, S&P did have a massive correction, and it's now close back to its all-time highs. And this chart shows that the S&P 500 will likely be going up and setting new highs in this coming year. Now, the next massive factor that can really move the crypto prices is liquidity. And this is global M2, the global money supply. And again, interestingly, the global money supply also is very, very cyclical. Expansions and contractions, and pretty much it's a repeatable pattern. Now, it'll be very hard to predict how high it will be expanded or how low it will contract. However, as we can all see, it's pretty cyclical. Now, we did have this massive explosion in liquidity in the COVID era, which is why risk assets went absolutely bananas, and we had one of the biggest contractions in global M2 following, which is why in 2022 we had an epic crash. However, what it shows is that even though we've had these big corrections along the way, global liquidity is increasing. Now, this chart, the one in blue, is what we were just looking at in the last chart. So this is global liquidity, and then this time he's overlaid the price of Bitcoin. And it just shows and kind of proves that the crypto market moves with global liquidity. When global liquidity goes up, the crypto market booms. When global liquidity comes down, the crypto market crashes. It is highly correlated to what is going on with liquidity. And full credit to Raoul Pal, as lots of people are talking about crypto and liquidity these days, but it's Raoul Pal that really called this out and showed people this is what is going on. And as we can see, after the 2022 crash, global liquidity has been increasing, and so has Bitcoin. It's pretty much a liquidity play. And the other big aspect of liquidity is the central bank's balance sheet. As we can see, this has been contracting over the past couple of years, but right now we are at an absolute inflection point. And what is this blue line? Well, this is the federal government's expenditures. And the problem is they printed an enormous amount of money in COVID, and this massive debt is coming due. The interest payments are going to be enormous, and they have to refinance this debt. Now, the problem is refinancing this debt at 1% would be an amazing thing, but they've raised interest rates to 5%. So refinancing all this debt at 5% is going to be an enormous problem, which is why they're going to have to lower rates this coming year. And here's a quick clip from Raoul explaining what is about to happen.
Ahead of us lies the monetization of the payments from the COVID cycle. You saw this year in the bond market when they started to try and issue new bonds to pay for some of the interest payments, the bond market freaked out. It's because there's too much debt. And you have to you have to issue an extraordinary amount of bonds when your interest payments have gone up from, let's say, 1% to 5%. They can't do it. The numbers don't add up. And so something has to change. They have to bring rates lower, and then eventually they will have to use the balance sheet. And being late is their way to ensure inflation undershoots their target. And I've shown that seems like it's pretty much baked in the cake. And that'll give them the cover that they need to relaunch QE. Whether they do it in the same format or a different format, who knows? But somehow, somebody's got to pay those debts, and there's no way the market can absorb it.
And finishing up with some price predictions, and this revolves around the GMI Total Liquidity Index and the price of Bitcoin. And they've made some predictions that if liquidity increases by 20% year on year, then just by May this year, in a few months, this could send Bitcoin's price skyrocketing to 218,000, which is crazy. More conservative, if liquidity increases by 9% year on year, this would give a Bitcoin target of 500,000 by April 2026. And for me, I prefer to be more conservative, so a 5% increase in liquidity would give a Bitcoin target of 210,000 by March 2025. And out of the three, I would say this one is probably the most likely. And in fact, this is very close to what I think is going to happen. However, who knows what's going to go on, and if there is a massive injection in global liquidity, then it could send prices skyrocketing. Next, same thing but with Ethereum, and this time he's just done it on a 20% increase in liquidity, and this would give an Ethereum target of over $5,000, which would be new all-time highs by just May this year. So obviously a massive Ethereum price prediction right there, but it does involve a 20% increase in liquidity, so I'm not sure that's going to happen in just the next few months. And finally, what is going to happen to the altcoin market? So altcoins have been absolutely crushed. They've just started to break out, and Raoul thinks that they're heading to this $2 trillion mark. And this means in this next cycle, you'd be looking at a 4x increase, which is a 300% return. And if Bitcoin's going to double or triple, then I'd say this is very realistic that the altcoin market as a whole can definitely do a 4x in this cycle.
They're all the same, whether you choose emerging markets, commodities, tech, crypto, it's all the business cycle. So you might as well choose the things that go up the most. And those things also happen to be on a risk-adjusted basis better bets too. That gets me really interested. I've gone from running much broader diversified portfolios to an ultra concentrated. Because if this everything code is right, this is a fucking gift. It's a gift for all of us. It's the one great macro trade. If that is right, then you should be taking as much risk as you can afford to according to your risk profile. And I'm taking a shit ton for me because I strongly believe in the work that we've done. This is thousands of charts and 30 years of work. I don't see a reason we'll get it wrong, but I'll keep you guys posted if things change.
Former Goldman Sachs exec and with decades of macro investing experience, Raoul Pal believes this is the year of massive gains. For him, the best places to be are Bitcoin, Ethereum, and Solana, and also Coinbase and Tesla and the Nasdaq 100. He says inflation is under control and will continue to fall rapidly, and with massive COVID debt soon to pay, this means rates will be coming down and QE will be returning in some form or another. And if liquidity does return, then he's thrown out some massive price predictions, and even if he's half right, it still means crypto is going to outperform pretty much everything else this year. And finally, we will be finishing with one last clip from Raoul with his very best advice for everyone for this coming year. However, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you got any questions or comments, post them below. To get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below.
Whole idea of this crypto cycle is do not fuck it up. You can basically capture most of the returns just by being in Bitcoin, ETH, Solana. And if you need to feed your inner degen, 80% in stuff like that and 20% or 10% in the stuff you want to punt. So you can feed your inner degen, but you don't screw up the whole trade. Again, don't fuck this up. It's the key mantra for this market. Don't overtrade, don't use leverage, don't FOMO, following your friends, looking at a trade you missed out. Just stick with the program, hold your trade, add on sell-offs, anything over 20%, add into it, and just calmly let it play out. Don't overtrade, don't try and pick tops, buy in, buy out, you'll miss it. I've seen everybody do it, I've done it myself. Just stick with the program, keep your cool head. Your job is to not part with your coins until 2025. Particularly towards the end of 2025.